Across America, for sale signs are vanishing faster than they can be planted. From Dallas to Miami and Chicago to New York, homes are moving faster, buyers are negotiating harder, and optimism is returning. After years of soaring mortgage rates and frozen demand, experts say the U.S. housing market is finally booming again. Not long ago, the outlook was bleak. Mortgage rates spiked above 8% in late 2023, the highest in decades, leaving many families priced out. The dream of homeownership slipped further away as affordability collapsed and sellers clung to peak prices. Now, in 2025, the tide has begun to shift. Rates hover near 6.3%, inventory jumped 17% year over year, and nearly 1 in 5 homes listed has cut its asking price. Price growth has slowed to just 1.9% nationally, the weakest pace in years. And in cities like Austin and San Francisco, values have fallen sharply. For the first time in years, the market is starting to listen to buyers again. Sellers are lowering expectations, negotiations are back on the table, and new opportunities are opening. After a long freeze, the balance of power is shifting, and buyers are beginning to take control. The slowdown began back in 2022, when the Federal Reserve raised rates to curb inflation. By 2023, mortgage costs had doubled, leaving affordability at record lows and pushing millions of buyers to the sidelines. That same year, investor activity slowed sharply, and once booming metros saw their markets stall. But inflation cooled, the Fed pivoted to rate cuts, and momentum returned in 2025. Mortgage rates did not collapse, but even a slight easing opened breathing room for buyers. With wages rising and job market steady, families began to step back into the housing market. Economic drivers are now fueling the rebound. A strong labor market supports steady demand, while wage gains are improving consumer confidence. Cooling inflation gives buyers more security, and stabilizing borrowing costs encourage long-delayed purchases. Policy plays a role too. The Fed's September 2025 rate cut was its clearest signal that the inflation fight had peaked. While mortgage rates remained tied to Treasury yields, sentiment shifted as soon as the Fed changed course. Demographics add another layer of momentum. Millennials are entering their prime home buying years, while boomers downsize, opening up inventory. Developers also see growing opportunities in senior housing as America's population ages. Global investors are returning as well. After being sidelined by the pandemic, foreign buyers see U.S. property as a safe haven. This renewed flow of international capital strengthens demand in major cities and luxury markets. Regionally, the story is far from uniform. Dallas-Fort Worth now tops the list of strongest U.S. markets, while Florida has roared back with multiple cities among the top 5. The Sun Belt continues to dominate migration trends, pulling demand from higher-cost coastal states. Coastal markets show more cautious recoveries. San Francisco prices remain about 10% below peak, while New York shows modest but steady appreciation. Charleston and Manhattan are emerging as surprise movers and shakers, attracting new investor attention. The Midwest demonstrates resilience. Chicago, Cleveland, and other industrial hubs are gaining traction thanks to affordability and economic diversification. Buyers priced out of coastal metros are finding better value in the heartland. This regional divergence is one of 2025's defining housing stories. The South and West are softening, while the Northeast and Midwest remain resilient. Inventory, pricing, and demand now depend more on geography than on national averages. For first-time buyers, progress is mixed. Affordability improved by 3.1% this year, the best in over 12 months, but costs remain 70% higher than pre-pandemic levels. Rising incomes help, yet debt-to-income ratios still make qualification difficult for many families. Renters are under strain too. Landlords are raising rents as supply remains tight, especially in major urban centers. This dynamic pushes more households to consider ownership, even when affordability is stretched. Builders feel cautiously optimistic. Housing starts are rising, but developers remain wary of supply chain costs, labor shortages, and regulatory hurdles. The push for sustainable building and suburban expansion offers new growth paths. Experts remain divided on the future. Optimists say this is a healthy reset, with the market finally finding balance. Skeptics warn affordability challenges and rising debt loads could slow momentum quickly. Price reductions illustrate the shift. Nearly 1 in 5 homes listed in September saw cuts, with Denver leading at over 30%. Luxury sellers hold firmer, but mid-tier owners slash prices to attract attention. Homes are taking longer to sell as well. The median time on market rose to 62 days, up a full week from last year. This forces sellers to adjust strategies, sweeten deals, and meet buyers halfway. Still, the national median home price holds steady at $425,000. That's flat from last year, but about 36% higher than pre-pandemic. Even in a shifting market, long-term appreciation remains strong. Looking ahead, risks remain. Affordability gaps persist, supply is still below pre-2020 levels, and Fed policy continues to loom. A surprise reversal in mortgage rates could easily cool momentum again. Opportunities also shine. Suburban growth is accelerating, sustainable building practices are gaining momentum, and senior housing is set to expand. Investors and builders alike are eyeing these niches for future growth. Analysts expect relative stability into 2026. Modest price growth, steady borrowing costs, and gradual supply improvements will likely define the next year. The extreme ups and downs of the last cycle are giving way to more balance. But every cycle has peaks and valleys. The question now is whether this rebound will last or fade into another correction. What matters most is how prepared households and policymakers are for the next downturn. For now, the American dream feels alive again. Buyers are returning, sellers are adapting, and builders are breaking ground on new projects. Confidence has returned to a market that looked frozen not long ago.
The U.S. real estate market is booming once more. But is this a sustainable era of growth, or just another peak before decline? Only time will tell, as the nation's most important asset class continues its cycle of risk and reward. Through crises and recoveries, the housing market has always adapted. From the post-war boom to the crash of 2008 and the pandemic frenzy, it has endured. Today, it surges with new energy, and tomorrow, its fate rests on choices made by buyers, sellers, and policymakers alike. One truth remains: the U.S. housing market is booming again, and its story, like the American dream itself, is far from over.